Good afternoon, Scott Redler, T3 Live Chief Strategic Officer. Welcome to Monday's recap. So, I'm sure all day long you're looking at the television set. Everyone's like, oh, what a difference a day makes from being down 270 or 80 points on Friday to today we're up 250 at our highs, which happened to be probably, in the morning. And then once they stop, they just grind, sit there, and then test everyone's patience. And here we are still in this range, a range that not the easiest to maneuver, not traders aren't high-fiving. One day the continuity is there, one day it leaves. As a joke, I talk about the air pockets to the downside like you saw on Friday, and then the spurts to the upside like you saw in the first, 12 minutes. The Dow was up 240 points. It's all because these misdirection trades have people trapped. Last Wednesday, Thursday, market looked like it was going to break out, and then if you got out of your longs Friday and you got short thinking that day one down is going to equal more, you might have got short and then you had to, make some adjustments or make some choices or sit, So it depends on where you sit. And you look here at the chart. This is your overall SPX. I know for me, I was thinking into this. I was, pretty long and I was sitting in a lot of positions. Thinking that we could break out, and then all of a sudden you had that reversal Thursday where we held in there, went green, and then boom, on Friday that happened. Okay, and if you sold your positions, got kind of light, okay, because that's exactly what I did also. But if you pressed shorts into the close, into here, chances are, you had some decisions to make throughout the course of the day, because again, look where the market is, look where this range is. I'm not saying we're going to break out anytime soon, like tomorrow or whatnot, but we're close to this spot, and you really have get support here, support tested. We engulfed. If the bears had any control, they probably would have been able to stop the market from doing whatever here. Okay, and then you have a move up. And now we'll see what happens. We'll see tomorrow if we get an inside day. We'll see what some more earnings. We'll see if it could hold higher. Let's see what IBM's doing. IBM came out after the close. It tried to go as high as, I think it was 171 before. And now let's see if it's holding up. They were kind of lukewarm report. Now it's only up 2. It was up 6. It was as high as 171. So, that report looked as if it was okay, which is the way the stock's been acting. It's been horrendous for 2-3 years, but lately it's been holding in there. But there was nothing very excited about that. There hasn't been that much excitement about a lot of these earnings, except for we're beating lowered expectations. So if you beat lowered expectations and the stock isn't at the all-time highs, maybe these things rally. But the thesis, besides the range that we've been in, and besides the choppiness from day to day, and besides the air pockets and the spurts and the grind, it's been very stock specific. And there are some setups out there that look decent. Apple, let's just talk about it real quick. Apple is still in this range. It doesn't mean it's going to break out yet. It doesn't mean that you're going to have a pre-earnings run. But, you did have this really quick move, and let me show you why. Because a lot of traders were thinking if we break below the 50-day moving average right here, which was at this was 126.11, this was 126, and I think this is 125.90. So on Friday, when the market broke, you had an ascending channel, and you had your down day. So this little trend was broken. Okay, so what did you know coming into today? You knew yesterday's high, or Friday's high, which was 126.14. So, I talked about in the morning call that it'll be interesting to see what happens with Apple, because it could help give you clues on the day. If the bulls reclaim 125.90 or 126.14, and if you're short overnight, because of the breaking of the 50-day, make adjustments. Cover, figure it out. Maybe if you were looking to be long, I know for me, I try and be long Apple when it's going up, and I didn't make the adjustments right there. I waited till, it pulled back, which I'll get into, and now we'll see what's next. But overall, that 126-ish was your spot. If you waited another $1 or so to cover your short, then, you were a little slow off the gun and you might not have been prepared. So again, you go back to the chart here of Apple, and you'll see, now it's basically right back in this range, right back at resistance, which has proven to be tough. And now you could draw a line like this. When it cleared this, and then it cleared this 127.10, and now I guess let's see if it could hold 127.10, and then at some point give you a trade through resistance to keep going. As earnings not for another whole week. So what I did is I missed this trade and then I waited for this pullback. You look at the 5-minute chart. When Apple broke, okay, here, I looked across and I said, where do I feel comfortable trying to get back into Apple, which was right around this 127.55. Actually, that was right here. That was my first buy the dip, and then I added a little bit, and I did go home long Apple. So, tomorrow, if the futures are down for whatever reason, I would think that if Apple's any good, it should hold this 126.75, 126.80, and then maybe go green. We'll see, because again, we don't know what the what the future's going to be tomorrow. If it's one day up, one day down, one day up, one day down, then tomorrow we could be down a little bit, and then let's see if it actually holds in there, and then gives you another trade maybe tomorrow or later in the week above this 128. But I'm going to try and be long this. Facebook also out of nowhere, boom. Okay, I'm still in those calls from last week. They're all green now. I should have bought more Friday, but it is what it is. And a little false breakdown move, closed near the highs. I don't know if it's going to break above this 84 pre-earnings. Earnings are Wednesday, but the closer it gets to here, the less it has to do after earnings. If earnings are good and their expenses are low, to clear 86, I'm going to try and be in the calls and stay in the calls. I did get long some of the stock today. We'll see if there's any follow through tomorrow. Twitter, I'm just in the calls. I didn't, really trade it today. It was somewhat strong. It went back and forth. They're still trying to fight it somewhat. Maybe with earnings next week, you still have time. If it starts to get above this 52-ish, it could get perhaps a little bit of a move beforehand. It's still stutter stepping higher. This was your earnings gap, and it held in there. Gave you a trade up, gave you a little red dog reversal, never violated it. Started to get tight, gave you another trade up, and now here, all in all, it's still above the 21-day when a lot of things came to the 50, so it's still sort of strong. Cybersecurity, hanging in there. This one had some news with Checkpoint Software. It's still nice pattern. It's not the easiest trader. It did clear this little trend line here and then wound up holding it, gave you an update this right there. If it were to break out, it's got to get above this 43.24. So if you think FireEye is going to make new highs, chances are you needed to be in it in here or in here. And if you're looking for a momentum trade, it's got to clear that. You go to CyberEye, CyberArk, it also looks pretty good, rounding up. I did. At some point in the afternoon, I got involved, and just because I know I'll be buying it, if it's going to clear this 63, I'll probably be buying it there, so I might as well have a little bit just to keep it on my radar. Above the 8-day, very strong. Held it right here again, and I guess if it were to clear this, shorts probably get squeezed, and then you have the highs here. This was my number one, trade into, one of the number ones into this year with my report. Here and FireEye, and then look at PANW. If any stock looks like it's ready to break out after a multi-week move, I'm not in this one, but maybe tomorrow if these things are down, above this spot here of 148-ish, you could see a move to all-time highs. It's been consolidating well. Now 3 months after its highs here, a lot of money still in there. It looks like there's still a lot of momentum, so we'll see if this could lead the way for some of those. It's definitely more of a leader stock compared to the other two, but good. Amazon, me and Amazon really don't mix. I bought the calls last week. I made it, you guys want to hear the truth? The truth is, we all make choices and we got to stick with them. Last week I thought the market was going to break out, so I'm like, let me be cute just in case Amazon breaks above 390. Let me have some calls. I think I bought them on Wednesday or Thursday. I bought some Facebook calls. I bought Twitter calls. Looked like we were going to break out, so I wanted to have some just in case things ran like Goldman Sachs ran prior to earnings, like Netflix had a pre-earnings move. And then on Friday, if you look here at the chart, I pretty much said, wow, it doesn't look like we're going to get that pre-earnings run. And I got out of my options and I saved half of the premium, which, at one moment I was thinking maybe I should just double down because I'm playing it for earnings. And I didn't, and I got, so that was just a bad choice. So today, it wound up engulfing this move back at highs. I got in the stock a little late, but, I'm not, the old Scott would say, I'm never touching this again. The new red dog, okay, I got in. Maybe it does do that move. There's a lot of buying in here still, holding the moving averages. It did close above this, so you would think you can get a little bit more tomorrow. So we'll see. Shack, what a stock, right? Look at that. Boom. For me, I just did that little 2-day trade one right here, one right there, and then I sold on this day, and then I haven't really done much since, and now look at that. Again, shorts getting squeezed. People think it's a high valuation stock. They just have a thesis on it. Chances are they're not going to stay solvent for whatever happens, into whatever level it goes up to if they're short and they don't have enough deep pockets. Above the 8 and 21 day, it's not a short. Maybe you get a red dog reversal around a certain area, but that's the Q trade. The better trade was being long here and then even staying long when it took out the IPO high, and now look at it. I always sell things a little early. This Habitat I think is interesting. I traded this a lot when it came public. You have this long sideways channel here. Looks as if it can clear this spot. Perhaps it tries to go again. This spot is 32.55-ish. Above that, maybe it gets a little bit of momentum. It's tight, going sideways. Restaurant stocks, maybe led by Shaq. Loco, someone talked about that today. This looks like it's just starting to nudge its head. So maybe in tomorrow's morning call, I'll go over some of these restaurant names. And what else? The banks, Morgan Stanley came out with numbers. It didn't really have a big move, but at least it didn't fall apart. Perhaps we get another chance at this at some point if the banks want to hang in there. JP Morgan, maybe, still, I guess, holding the gap from earnings, holding the prior breakout, just no real traction. You still have an environment where people think rates might not go up until next year now or September. So see if it spends time in here where we could get involved for more gains, but it's already had a big move and now it's letting the moving averages catch up. What did Juno do today? Whoa, what happened there? Okay, that's not, either that's a misprint or something. But it broke this trend, broke the upper area. This was your out, I guess, 62.22 when it broke this area, and now it's going to need time. That's going to definitely put the fear of God in some people. IBB held in there, didn't lead, but hanging around. This is your defined resistance now, and I guess this is your support, and see if it builds a mid-level channel here to continue. I think some people are shorting the relative weakness today, but we'll see. On BIIB, what'd you do? You had big news again. Did you sell off? BIIB was up $5, and again, no traction. Usually that's a bearish sign. Every time it gaps up and gets sold, that's a little bit of distribution. So take a little care here. If this were to break, I would think the buyers would be in a little trouble. So would that stock. And to wrap it up, it's Monday. Market back in the upper end of the range. Does that mean just short the upper end of the range? Probably not. Does it also mean go guns blazing long? Probably not. So I am not in the indices just in case we gap down tomorrow, but I am in 5-6 names that I think are acting well, that if we happen to be down tomorrow could go red to green for a trade, or if we're up tomorrow could get some upside momentum. So I'm trying to stay with the market. Day trading has been very hard. It's been very specific. You have to be there at the exact time. They're not giving you that second, third tier move. Even short. Think about if you wanted to be short. You probably got squeezed last week, and then if on the gap down on Friday, if you shorted the open, you made some money. But if you stayed short and pressed the lows, or on that rally back up in the last hour, you said, I'm going home short overnight, chances are you weren't able to hold on through the first hour. So it's been just as hard to be short as to be long. So be in that stock-specific trade if you have a thesis, and more importantly, know your time frame. Markets are like 1-2% off highs, and if you've been an investor monthly with flows for the past 30 years, you're doing well. For the past 20 years, you're doing well. For the past 10 years, you're doing well. Yes, we trade cute intermediate trends. That's why we use the 8 and 21-day moving average. When we're above, we try and be long. When below, we get neutral, stays below. Maybe we look for some shorts and then figure out if we do correct, which we've only tested the 50-day last Friday. Then we get to test levels and figure out where we could find support. Because in order to get to the 200-day or a real correction, you got to be below the 8 and 21-day first. And in order to make new highs, you got to be above that. So that's part of my thesis. A lot of people were asking me over the weekend about it, so I figured give a little bit more explanation today. Have a good night. See you tomorrow morning. Hasta la vista.